maximum employment, and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leachman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Well, so as we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, I mean, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think, if you look where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape. And our policy is sort of modestly or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Got a little whippy there in that price action.
Chair Powell, there's naturally a lot of PTSD around 2021 with supply shocks. But there are some who argue that the current situation has notable differences. Energy costs are down. Housing imbalances look nothing like they did 4 years ago. Labor demand appears to be gradually cooling, with wage growth running below 4%. What do you see right now that could nourish higher inflation beyond a rise in goods prices this year?
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
As I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And, when things develop, of course, we have a record of, we can move quickly when that's appropriate. But we think right now, the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
John L.
Did that get filled?
Janelle
No, I
Marte
told
with Bloomberg. So many economists have been pricing in higher odds of a recession, and several are noting that it is more difficult for the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you
Order
see
filled.
a path for a soft landing, and what does that look like?
Well, let me say, so let's look back and see where we are. So
I'm short order out.
go through 2024 up to the day. We've had unemployment in the low fours for more than a year. We've had inflation coming down now in the mid to low twos. We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately
Order filled.
at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we never do anything but keep achieving those goals. But we would, at least for the next
Order
year,
filled.
we would not be making progress toward those goals. Again,
Order filled.
if that's the way the tariffs shake out. The thing is, we don't know that. There's so much uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times, but the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now, and we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got forecasts of weakening in the economy, and some have recession forecasts.
Order filled.
We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is. But in any case, it's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
Order filled. Order
Smith with the New
filled.
York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to lower interest rates again? Is it about a certain increase in the unemployment rate over a period of time, or perhaps a certain number of negative monthly job reports? I mean, how are you making that assessment?
Order filled.
So first of all, we don't see that yet, right? We have 4.2% unemployment, good participation, wages behaving very well. Participation, I mentioned, at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the
Order
level of
filled.
the unemployment rate. We'd look at the speed with which it's changing. We would look at the whole huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same time, we'd be looking at the other side of the mandate. We could be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you've mentioned that the committee would consider how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. and this is, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. You know, we haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but you know, we have to be keeping it in our thinking now.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So given this, should the Federal Reserve be cutting rates at all this year?
You know, it's going to depend. I think you have to just take a step back and realize this is why we are where we are. Is you know, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't, and we just don't know until we know more about how this is going to settle out and what the economic implications are for employment, for inflation. I couldn't confidently say that I know what the appropriate path will be.
So following on that, just, you know, so then how does President Trump calling on you personally, as well as the Federal Reserve, to make rate cuts affect your decision today and affect your job difficulty?
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement, the risks of higher unemployment and higher inflation have risen, but they haven't materialized yet. They're really not in the data yet. So that tells me more than by intuition, because I think it's obvious actually that the right thing for us to do is we're in a good place. Our policy's in a very good place, and the right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book was talking about, the beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the sideline. Doesn't that point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues, and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will change that narrative. I mean, they haven't happened, but it's possible to imagine things that, but in the meantime, yes, we're watching it extremely carefully like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of people and businesses.
Michael McKee from Bloomberg Radio and Television. The Fed's been criticized recently by a former governor for what he calls mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again?
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, hey, you could have done this better and different. And one thing we hear a lot is we could have explained QE a little better. We did think we were explaining it in real time. I completely accept the thought that we could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network of greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent? And I think that's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did. Anyway, that's what I think.
Should you have taken on the question of bringing unemployment rates down for specific categories?
We didn't do that. What we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our, but I can see how, maybe people found that confusing, and we have to take that into consideration.
Tape bomb.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS News. You've said wait and see, and the economy is doing
Order
fine
filled.
today, but the impact of tariffs are already showing up. at the
Order
courts.
filled.
Businesses big and small are telling us that they feel it, and most importantly,
Order
consumers,
filled.
they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Order filled.
So we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the, a shock from the tariffs, but they really haven't, that shock hasn't hit yet. Okay, so, we're going to be looking at the not just the sentiment data, but also the real economic data as we assess what it is we should do. And remember, there'll be two effects. One of them would be weakening economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so
Order
we can
filled.
wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. People are not layoffs, or people are not getting laid off at high levels. Initial claims for unemployment are not increasing, in any kind of impressive way. So the economy itself is still, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you
Order
heard that,
filled.
What did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen, 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well-positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great, and just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the two goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. You know, I think you know what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, you know, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. You know, I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Offering at 57 now. Go up again.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
You know, we don't give Congress fiscal advice. They're going to do. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path, and it's on Congress to figure out how to get us back on a sustainable path, and it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Order filled.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risk to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of the number. But if we did see significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Wah, wah, wah.
Claire Jones, Financial Times. In terms of getting
like
some
the accent.
clarity, we've got some
Another
talks
T.
the weekend in Geneva between the US and China. A lot of economists are they're
China.
attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices.
Maybe a long opportunity
if
right
we
here.
don't kind of soothe relations between the US and China.
I was
So
looking for
good to have your
27,
view on
so
that
I had
too.
a bid out down at
So,
27.
these are not talks that we're in any way involved in, so I really can't comment directly on them. So, but what I will say is this, we had, coming out of the March meeting, the public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, I mean, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is, this is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
There it goes.
Kosuke Takami with Nikkei. Thank you for doing this. The volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decisions. So the volume of the imported goods increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in imports, right? Very big, historically large, really, and to beat tariffs. And now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely as imports drop sharply. You could also have, very likely you'll have restatements of the first quarter. It'll turn out that consumer spending was higher. It'll turn out that inventories were higher, and so you'll see those data revised up. It may actually go into the third quarter too, and so I think this whole process is going to a little bit make it harder to make a clean assessment of U.S. demand. I mentioned private domestic final purchases, which doesn't have inventories, government, or inventories, government. Anyway, it's a cleaner read on private. demand. But that too probably was flattered a little bit by, by strong demand for imports to beat tariffs. So that might overstate. It's a really good reading, 3% PDFP in the first quarter. That might actually overstate. So it's not really going to, I don't think it's going to affect our decisions. I will just say, though, that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP is sending a signal, PDFP is sending a signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data to, make any type of monetary policy decision, especially if the hard data is not as timely or might be warped by tariff-related effects. Are you worried that the soft data might be some sort of false warning?
No, I mean, look at the state of the economies. The labor market is solid, inflation is low. We can afford to be patient as things unfold. There's no real cost to our waiting at this point. Also, the sense of it is we're not sure what the right thing will be. There should be some increase in inflation. There should be some increase in unemployment. Those call for different responses. And so until we know, potentially call for different responses. And so, until we know more, we have the ability to wait and see. And it seems to be a pretty clear decision. Everyone on the committee supported waiting. And so that's why we're waiting.
Just a very quick follow-up. There was this sort of vibe session, if you will, where the sentiments expressed in soft data did not translate into the hard economic data. How are you thinking about that when interpreting some of the signs in the softer survey data?
I think going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all. On the other hand, we haven't had a move of this, speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But it's another reason to wait and see. You're right that we had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This is an outsized change in sentiment, though, and so none of us is looking at this and saying that we're sure one way or the other. We're not.
Matt. Thanks, Chair Powell. Matt Egan with CNN. So you mentioned earlier that you're monitoring the shipping data, and we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged, and that has raised concerns about potential shortages. What tools, if any, does the Fed have to ensure that prices and inflation expectations don't get out of hand if tariffs do cause significant supply chain disruptions?
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything. What we can do with our interest rate tool is we can be more or less supportive of demand, and that'd be a very inefficient way to try to fix supply chain problems. But we don't see the inflation yet. We're of course reading the same stories and watching the same data as everybody else, and right now we see inflation kind of moving sideways at a fairly low level.
If I could follow up on that, President Trump has indicated that he will likely name a replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if you're no longer chair?
So I don't have anything for you on that. My whole focus is on, and my colleagues' focus is all on, trying to navigate this tricky passage we're in right now, trying to make the right decisions. We want to make the best decisions for the people that we serve. That's what we think about day and night. And this is a challenging situation, and that's 100% of our focus right now.
Let's go to Jennifer for the last question.
Chair Powell, Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president, and I never will. It's not, I wouldn't do that. There's never a reason for me to ask for a meeting. It's always been the other way.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative that I take. It's always an initiative. I don't think it's up to a Fed chair to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to meet with you, but that hasn't happened.
And if I could just ask one question on monetary policy. When it is time to cut rates, how will you determine how far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
There you have it, folks. Powell is no hurry to do anything. No hurry to do anything. The Fed understands the concerns, the uncertainty in American households, but so far they're saying there's no data to back that up just yet. So they're waiting on more data. They're kicking the bucket down the road, kicking the can down the road, as Eddie said a few minutes ago, and no change in policy today. Any takeaways you guys want to talk about?
Higher for longer,
Q&A?
baby.
Higher for longer.
Higher for longer.
And we got some pretty mixed reactions from the markets. We broke, we spiked, now we're right back into balance, right back in the middle of the range that we spent most of the day trading in, at least in the ES.
Right where we started.
Right where we started.
Almost to the
Gold
back.
started to sell a little towards the end there.
Yeah, we did see a break in gold. And some buyers stepping in as we speak. Yeah. Inflation
nice,
expectations are up. They understand everything. Job market's healthy. Economy's in a good state. The Fed is well positioned. Quote, I wrote this down. Well positioned to respond in a timely fashion to new data. So that is it for now.
Buy it?
No moves from the Fed.
I mean,
sounds pretty confident or positive, right?
Yeah,
Doesn't
just
sound
buy it.
negative.
No pain.
No,
just
he
buy
did.
it.
He did avoid a couple key questions. What would what kind of drop in the unemployment rate would they be looking for in order to make a move on interest rates? He kind of avoided that question, just saying we're waiting on more data. But again, he thinks jobs are healthy right now. We're still at 4.2%. We've been in a narrow range for the last year and a half. Pretty tame Q&A.
I still don't see anything to do here.
I like the longs and the Nasdaq.
Yeah, why not? I like the longs in the ES too. Dolby time. Where is our man Dolby?
Where's Dolby? Get in there and buy.
We gotta find Dolby and tell him to buy.
Where do we buy this market?
You guys got Dolby coming in. I'm going to head out, get ready for At the Buzzer. Dolby has the keys to the house account. He's ready to drive, I'm sure. So trade well, guys. Catch
Coach
you
Jay,
all.
appreciate it.
Take
We
care,
will
Jay.
see
I'll
Coach
see you
Jay
tonight.
at the buzzer and for slow markets. You got a lot more Coach Jay coming up.
Yeah.
Later today and later this evening. Thanks for joining us, Jay. Always appreciate it, my man.
All right. Have a good one.
Take care, man.
Dolby time has arrived. The man with the keys to the house account. We're scouting out some longs in the equities, Mr. Dolby.
Is there enough time for a 50 lot, JD?
We could do anything you want. We're sitting right on top of overnight VWAP in the ES 5635. We are on it right now. Dakota likes a long. Sounds like David Green likes a long.
I mean,
Saw a few
I don't
comments
like
in
anything
chat.
right here, to be honest with you.
No, right in
I
the
have-
middle of the range.
Down to
But-
24, I like. We can spike down to 24. Got room to
Back
57.
down to settlement price.
But I'm not in a hurry to do anything here.
Fair enough. Fair enough.
Break above maybe like the 42s, 43s can give a little Momo, but we're just sitting. We had a good trade set up while that was going on. We spiked right up to both of our, right at the 46 level, our 65 and our 200 EMA, and we got like 5 points out of that. We spiked up there. So we're just kind of sitting in nowhere's land right now. Like I said, I have some support down at 27 and resistance up at 57.
Do you guys have any trades on?
No trades.
Not at the
Dakota
moment.
is locked out. Did you lock out for the day, Dakota, or did you put a time
Yeah,
lock on?
yeah. So I'm just in a combine right now, and I am, as of right now, I'm long 3 at 57.5.
57.5. Nice.
57.5 in the NQ. Long 3 NQ 57.5.
Don't ask me. I'm off by 100 points every time I pick some.
Well, Dakota's got a position on now, so
he's a bias.
He's probably got a bias. Yeah.
I have a bias. We could do
Let's hear
over and
it.
under my position. How about that?
Winner or loser? Okay.
Yeah, there you go. 57.5. 857.5. There you go, chat.
Dakota's taking the
Above
over.
below. I'm picking the over. Yeah, let's do that. I'm going to widen this stop
Over
up
under.
and see if I could pick that over under. Let's widen it up. There's the above below. I like the longs above 50.
Well, I got some longs in. We're gonna bid every 5 points between 780 and 720. Sorry, every 10 points. Every 10 points.
Oh, I love you, Toby. I was gonna say, just bid every 5. Just bid it all.
Every 10. Every 10.
780 to
What?
720. Okay.
Sorry, 780 to
780?
820. 780 to 820.
There you go. 820 and lower.
40-point range that we're going to try to bid if it can pull down.
All righty.
Okay. I like that. I got to vote for
That
myself.
puts my vote for above. Yeah, I just voted with you too.
We'll see. We'll see if this
Nothing done on that, right? No, we didn't get down to 720. We got a fader
joining
in the
you guys.
chat.
Looking for
I'll
820.
join long small with you guys so we could all be wrong at 27 in the MESs.
Are we all getting long
Okay.
and wrong here?
Well, no way.
Long and
Come on.
wrong.
You want to shorten America.
1800 too easy in the chat thinks that we're long and wrong. He says TopStep's going long. Short it, guys.
There you go. Boom,
It
Charlie.
wouldn't
go.
have worked this morning, and it wouldn't have worked yesterday. So, don't know if that's the play you want to have. They're aligned. Short it, boys. Oh, chat. Never change. All right, we're in one.
Okay.
In two.
Counts in 1.
You trading minis or micros, Dolby?
Let's find out. Micros.
Micros. Let's find out.
You're trading micros.
Love it.
Once we get filled, we'll look at it.
Yeah, exactly. Exactly.
Jackal says this position's going to get eviscerated. I love the adjectives. Eviscerated.
Eviscerated.
I want to see if we can do a stop run, basically, of 784s. That's kind of what my thesis is here. Stop run of 784s, and then maybe bid back up into point of control. Where those stops at?
This is at the close, right? So
3
above
p.m.
859.5 at close.
Yeah, you got time.
So we got a little bit of theta.
Mm-hmm. Got okay, long 3 at 19,810.
Dobie.
What?
What's
the problem?
Bader's in the money.
Absolutely.
For now. Long 4 at 805.
I'm gonna close. Oh. I'm gonna close one. I gotta leave at least this runner so that way we go into the close.
Oof, long 5. Okay.
Ooh.
At
There
800s.
we go. All right.
Long 5 at 800s.
Time for a bounce.
Is it
I would
deep
like
enough
one.
for your stop
5
run?
micros from 800, 19,800.
5 micros from 800s.
800.
Okay, I
Long
need to
5,
mark my price.
19,800.
Let me mark my price. 50. I said 57.50, right? Is that what
Mm-hmm.
it was? Okay. Why is it not?
Oof, this thing is heavy.
Ooh. We all long and wrong.
Guys,
There we go.
we tipped the boat
Long and
over, I
wrong.
think. I mean, we might have tipped the boat over. I don't know.
Are there a lot of live
Not yet,
traders in
Dobie.
chat that just faded us?
I don't know. Look at this.
Not
Look at this
really. The
15
tilt's
point
still at
bounce.
50-50. Tilt's still at 50-50.
Yeah.
Y'all are cooked. I don't know, not yet.
We're only 10 points from our average price here, guys. Well, 20 now.
I might get back in if we start to consolidate here.
You get a nice little
EMS holding for 37.
Let's go. Let's find some buyers.
Nice job, Lisa.
I click my mouse really fast, I might go up.
You what?
So if I click my
Might go up
mouse
what?
really fast, I might go higher.
The faster you click, the higher it gets.
Oh yeah.
Reading through the chat. Yeah, nobody in chat likes our position right now.
Not one. Not a single person.
How could you?
I don't
That's
know.
the tilt too, right?
Listen, we got to be perfect. There is no room for error in trading. Got to be perfect. Every time. Ooh, I filled
Just blew out
100 on the
through-
MNQs.
Yeah, I saw that. Just blew some liquidity in the micros.
I also am interested in longs at like 940s possibly.
940s?
Sorry, 740s. 740s.
Okay.
There's some wicks
dang.
down there. No, go back
What kind of
up.
CYA are we looking at? What's our risk on this trade, Dolby?
40 points.
40?
Mm-hmm. Where's the house account at?
Up 15. Let me double check.
15? Oh shit! I should have done
1500.
minis.
No,
Jeez.
no. You don't trade it
Should've-
based off that. What's the entry price for the house? From 800
800.
evens. Okay.
80.
All right.
800 even. Yeah.
I like it.
House count is up 1458, $1,458. We're up on the
We're
day.
doing good. What a great day. We'll end green no matter what. If we get smashed here, we'll just lock it up.
Looking out my back door.
Yeah, what song is that?
I don't know. I don't even know half the songs I sing half the time.
That's how I feel. I'm tone deaf.
We got our
I have no
chat.
idea what's going on.
We got our poll results back. Will the NQ close above or below 857 half at 3 o'clock p.m. Central Time? 54% said below. 45% said above. That comes from 337 traders. 337 votes.
Looking at my back. We need to hold these like 15s.
David, they're saying it's Credence Clearwater. Credence CCR.
Ew.
Credence Clearwater Reliable.
That's going to be. It could be a top quiz question tomorrow, folks. Don't quote me on that. I'm not saying it is.
Not a bad
It
idea.
could be.
But I already got them done there, JD. Maybe for Friday.
Okay. Okay.
Great band, CCR.
Looking at my back.
Fortunate Son.
That is Credence Clearwater Revival.
Yeah.
Well, almost got back to break even for a hot second. Let's see if we can maintain it.
Trying to hold it up here.
Trying to get back.
Yeah, we need to hold the 15s.
15s
is a big level.
You're looking at 815s?
No, I'm saying 56 15s is a level to hold here.
Yes, got it.
Got it. The ES, yeah. All right.
Need a tape bomb to the upside. That's what we need.
You need a Trump.
Trump,
yeah.
Save us. You're our only hope.
Obi-Wan Kenobi.
Any insight?
He did say there was a signal yesterday, right? Yesterday he said something about something huge coming into.
He did.
Deal.
There's gonna be some
Last
massive
time
news.
he sent a tweet out, he says, "Nice time to buy."
It's true. That is true. Hey, shout out
David,
to Nacho.
Can we reach out to the Tooch? Can we reach out to the Tooch and get a teaser on the MOC?
Yeah, I'll ask him.
I do not want
this might be the tape bomb we need.
Yeah. That's right.
Oh,
let's not.
Dobby, we're at the entry.
Whoa! It's getting crazy, chat.
We're going.
I like how Benji earlier said he already faded us and made money, and we haven't even flattened this position yet.
Oh, they could have when they first started.
Sure. I think you just took a trade, my guy. You just took a trade. I don't think you were like against us or anything.
Timing's everything, right?
It's the most consistent hater in chat. It's awesome.
Hey, you gotta amend that.
Don't forget to like and subscribe.
It was like 5 minutes ago. It's like we're still in this trade. How is that even possible?
He scalps 1 point short.
Yeah.
In this past 40 minutes, and then you say you made money fading you.
Just like a bias check. It's like your bias is wrong. Insta fade. 800s. Come on.
Yeah, we needed to hold those 15s.
Yeah. This looks ugly. We needed the 800s to pop. Maybe buyers still come in here, but
we tried. The fact that we failed those 800s does not look good.
It's not ideal.
There could be a decent probability that we go back down and test 700 even back down at the low of before he started talking. But haven't failed yet. We still have that pivot at 740s.
Hanging in there.
Is it possible? Is that correct?
Is that Joe Pesci?
Pete's early line right now is sell 700.
Sell 700.
Got it.
Okay.
It will change in the next 15 minutes.
Yes, that it will. Was buy and it flips sell.
Starting to build some volume down here on the volume profile, actually. Quite a bit.
We held the 60s again.
Get away from the stop. Get away from the stop.
Hey, David, we've got a question for you in chat.
Yes, sir.
We got some time here. Bullet Trader says, David, how did you get started in trading? And if you could go back, what are some of the things that you would do differently?
That's a great question.
Good question.
Very good question. So let's see. I had two brothers who were working on a Florida, New York stock exchange. They both loved it. I was working at some home goods store out on Long Island, and Asked both my brothers if they could help me get a job.
Where'd you go? Did Goldman shut you up there? Too many secrets coming out?
I filled out an application to become a squad, a runner on the floor of the exchange. And out of the blue, like 6 months later, I heard from them. It was a Friday. They said the job starts Monday. I think I was making like $300 a week. They say the job pays $165. You have to. So I quit my job. I started working on the Florida Stock Exchange. I was 23 years old. Here we go, guys. Little resistance up here at 24s.
You're looking for, let's see, 40s, 60s, 80s, 900s, and 920s.
I just lightened up half position up here at the 24s.
Wow. Came within 4 ticks of our stop. Was our stop right at 60? Or just
It's at 60, no, even closer, 60-50.
60-50. Wow.
Yep.
Good stop placement. We're in the money.
Yeah. So far, so good.
We need to clear 27s. That's the next resistance level.
27. Yep, I agree with that. Might have some support become resistance, but we also might not. Let's go. Let's go.
You're in the money now, right?
Oh, Benji saved my trade. You were a hater before.
24 points. Yeah.
Dude, I love
Benji's
you,
always
chat.
right, huh?
I love
Benji's
you,
the
chat.
winner today.
So good.
All right,
All right,
Benji.
we're break even. Free trade.
Yeah,
Free
I'm
trade.
flat up here. I am flat.
Let's get Benji's answer first for our
it down.
Series 3 question of the day. Colby, did you just cover that trade? What'd you do?
No, we're break even.
Okay, got it. Stop moved up.
Free trade.
All right, nobody answer the Series 3 question until Benji answers. That's a challenge to you, Benji.
Okay.
Is it true or false?
All right. Are you ready? You ready for it? All right, here comes your Series 3 question of the day. True or false? A CTA is someone who advises as to the value of future contracts, options on futures, retail off-exchange Forex contracts, or swaps. Is that sentence true or false?
I have no idea.
Okay, where's Benji is supposed to end. This is for someone named Benji.
Yep,
for Benji in the
G.
chat.
Waiting on
Benji's
Benji.
called all
break even.
Benji's called all the trades since we started Power Hour.
Really?
Oh, Benji G.
Break even.
Is that him?
Yeah, Benji G. He says it's true.
Benji G said true. Benji
I
G
think
says
the big
true.
thing here is the word or. Or sort of throws it off a little bit.
Benji G says
Is it
true.
all those or swap?
Did you Google that, Benji?
No Googling. That's cheating. Oh, we got flat on that one. We got break even.
All right, well,
Scratch
Benji
that one.
didn't Google it. Someone
Yeah,
get Benji to
that's a
tell you next
horrible
week's lotto
Google.
tickets. Because the answer is true.
The answer is true.
Horrible using Google. There's no way to tell, right? The speed of answers, maybe. Speed of answers.
Got to be quick on Top Quiz.
Oh, you do.
Speed is a factor.
Yeah, you can't Google it on Top Quiz, can you? Because it happens too fast.
Yeah, you only get a couple seconds to answer on the quiz. And the speed of your answer affects your score. So.
And the speed of your answer affects your score.
What are we doing?
Try, Arlene.
What are we doing? Go to break even.
Break even.
The worst. Well, there goes the money that we definitely had in our pocket.
Deep Seek. Hey, looky here. Looky here, chat.
Nice job. Shouldn't have moved the stop. Never moving it ever again.
Wait, we're still in this, right?
Nope. I moved it to break even like a dum-dum.
Didn't we pull that yesterday in the chat?
No, Shaman. I know.
He moved stocks to break even.
I can't, it's the worst. It's honestly my worst habit. I thought biting my nails was bad, but moving to break even is by far the worst.
Hoag's in the chat, Dolby. Hoag is
Lenny
scolding
did.
you.
That's Lenny did.
I
Lenny
Lenny'd
the
it.
trade.
I'm guilty. Definitely guilty of the Lenny.
Some of your better trades you end up messing it up and making a mistake
every time. Stop touching it.
You didn't lose. You didn't lose anything. That's how I look at it.
Stop touching it. I did lose $9.50.
Muhammad's absolutely correct too.
I said I was getting out at the 28s, Dolby. That would have been a nice profit.
No, that's true. I should have just taken it at like 40s. It would have been like $300 on 5 micros. Would have been a nice little trade.
Or at least covered a couple before you went to break even.
Yeah, good idea. Actually, a much better idea. Oh, son of a bitch! Look at this.
There's the rip.
God.
Oh, look at there.
Look at that rip. Look at that rip.
Look at there. Look at there.
Never again, chat. Never again. That would have been almost all of my targets too. You got to be kidding me.
And I'm
Never
still long.
again. Nightmare scenario.
I'm still
Oh,
long.
yeah, are the faders still short?
Literal
I don't
nightmare
know.
scenario.
I don't know. This is going. This is going.
Holy mackerel.
Wow.
I
We
swear
gotta
to
see
God.
that in points. We gotta see that one in
What a
points.
rip.
What are we at?
Insane.
What are
What
we
is
at?
going on?
What are we at? 200 points. 200 points. Did Trump take a jab? Trump answered. That's a.
looking
We're
for
going to
headlines.
the moon. We're going to the moon.
Ooh.
Trump
Headline,
didn't like
Trump
what
to
he heard.
rescind. Yeah, Trump to rescind
hell
global
was
chip
this?
curbs amid AI restrictions debate.
Really? He just said that?
Officials ready to repeal the AI diffusion rules launched by Biden. So he's flipping shit here. NVIDIA has objected to the rule and pressed U.S. for a reversal. They have
Something,
also
news
slit the
came out,
tires on Air Force
Trumpy.
One.
Trumpy said something.
Yeah, that's what he said.
Wow.
Oh my God. I had to take a lap.
I'm up 250 points. 250 points on this
Nice.
trade.
In freaking sane.
You gotta love him, you gotta hate him. There you go.
It's not done yet either. It's ripping.
Don't look like
It's ripping.
Carl.
Holy
Yeah,
cow, and dip me in it.
What?
It's just going.
What happened here?
We got tweeted, man.
Trump headlines.
Game of ticks, chat. Game of
Once
ticks.
again, Trump to rescind global chip curbs amid the AI restriction debate.
Oh, that
What does
helps.
that even mean?
I'll break it down for you.
Yeah, tell me what that means. If I don't know what
Says,
that means. Does that mean he's not
NVIDIA.
Doing tariffs anymore?
I think he's opening up the doors here. Sort of killing those restrictions from the Biden administration.
Okay.
Wow.
Literally never. This time, never going to break even. This time.
All chip restrictions appear to be moved.
Wow. What a move.
Yowza.
That was a hell of a move.
That was.
All right.
Wow.
Well, we got a little lull in the conversation here. Dakota's hanging on too long. NQ has settled down a little bit after a nice rip on AI news. We're going to bring Gabe in just a second. Talk about our new bonus policy. Gabe, whenever you are ready, my man. Let's hear it.
Attention, attention. There you go.
It's going. It's going.
All right, what's up, everybody? Back again. Another quick little reminder. As of the end of today, the close, we are officially releasing for a new program update for our live funded traders using TopStepX. We are releasing the TopStepX live funded performance bonus. There are 7 bonus levels. And complete all 7 bonus levels, you'll earn more than $250,000 in bonuses on top of any profits or payouts that you've taken. We're super excited to launch this. This is one big incentive that we've been looking at to incentivize our traders to continue to build longevity in their live funded accounts and reward them for their hard work. Couple quick things about it. So the bonus ladder, you see here, there's 7 tiers. A couple rules about it. 1 bonus per calendar month, 1 level at a time. Can't skip levels. But all profits are counted even after you withdraw. So payouts do not count against you. In addition to that, there are no restrictions on taking the bonus out. So you can withdraw the bonus as long as you are eligible for a payout. So the only thing that you need to do is continue to trade the way you are trading, and the bonus can be included on your next eligible payout. So if you hit 5 winning days of $200 or more, or whether you're at the 30 winning days already and you are taking or eligible for taking daily payouts, as soon as you become eligible for your next payout, you can go ahead and include that bonus once you hit that profit target and receive that deposit into your account. So it's not withdrawable like on the spot as soon as the bonus hits. You still need to be eligible for the payout, but it is able to be taken out of the account. So super exciting. I know we have limited time, so I'm going to pass it back to you guys, but just wanted to put it right in front of us one more time before the end of the day. And we are going to post a link in chat for the overview page, which we have on our website to help with some FAQs. If you do have any questions, we will also be available in chat. But that's what I got for you, JD. Back to you.
Thank you, Gabe. Excellent explanation.
MLC in 3 minutes.
Hey, you ready?
Let's keep going.
Well, now it might just go back to point of control. Who knows? We got back under 20,000 again so easily.
Coming right back to settlement price.
What a ripper.
Yeah, we exactly hit our previous day high at 56.73.50.
Yep, same in the NQ, 20,037. Yesterday's high in the NQ.
I got my technical analysis on that 5-minute chart set up. We're good to go.
Did you see the previous day high we hit?
The rocket ship. It's a rocket.
You don't need a stop loss.
Looking at my back door.
Bye, I got break even. Too early.
WWZD. Short-term memory, man. Short-term memory.
Oh, what was our price for closing price? 857.50.
Yeah, 857.5. 857.5, and we all chose above
the over
here
because
on
we were
air.
long.
Yeah. And there was a lot of chat. It's called DBA Concepts, David Mills. Yep. We're doing the new concept starting in slow market.
Oh my god. The market reimagined with Dakota.
Sit tight and wait for a 200-point ripper.
If you don't mind,